how do this week's CPI print that we got today, and of course tomorrow's PPI print that we're getting tomorrow, how much will that answer the question of whether the Fed cuts 25 or 50 basis points? Or do we need to see the employment data for the Fed to make that final determination?
Right. I mean, I think we have all the information we need. I think that the differences between, say, the US and Europe, services in Europe are sticky, the inflation rate is high, and the wages inflation is running high relative to productivity. In the United States, it's really the rents, it's not the wages. So I think the Fed's degree of anxiety on inflation is something that they're going to watch, of course, but I think the anxiety is gone. I think the anxiety has shifted 100% for all practical purposes to employment. Employment that, as of June, looking backwards, was growing at a really solid pace. You could quibble about whether you like the kinds of jobs being created, but it was a solid pace. Now, between the prints that we've seen and the revisions, excuse me, you have a rising unemployment rate and an unacceptable rate of job growth. And so the Fed, I think, is going to start with 25.
Okay.
Before they went into the blackout period, they did not signal 50. But I think what we're going to see from them is a desire not to alarm anyone, but the notion that they may need to be neutral or accommodative. They need to bend the line. They need to get a little bit higher rate of job creation at this point. And frankly, for most of the components of inflation, they're running below pre-COVID levels, which, if you recall, was when they were going from 2 3/8 into the ones with an unacceptably low rate of inflation. So this is a 180-degree turnaround from where they were 3 months ago.